So, you know how everyone's always chasing that next 100x crypto coin? It's all over the internet. But what if I told you the real money, the smart money, isn't in the coins themselves, but in the companies that are actually building the whole system? In this explainer, we're going to dig into a totally different way to play the blockchain revolution. We're talking about the picks and shovel strategy, the one that could offer much more sustainable growth. Let's jump in. And this quote right here, this is the entire idea in a nutshell. For just a minute, let's forget about the crazy up and down price charts of individual coins. We're going to focus on the businesses that are the actual backbone of this new digital economy, because that's where the really savvy investors are looking. Okay, so here's our game plan. First, we'll talk about why you'd even pick stocks over coins. Then, we'll look at why 2025 is shaping up to be such a massive year for this space. After that, we'll dive into three key company types: the infrastructure, the exchanges, and the payment systems, and we'll use NVIDIA, Coinbase, and Block as our case studies. And finally, we'll wrap it all up with a big takeaway. Right, so why not just buy a bunch of Bitcoin and call it a day? I mean, it seems simpler, right? Well, the answer really comes down to how you think about risk and how you think about reward in this brand new world of digital assets. This slide really lays it all out. It's like two completely different universes. Over here, you've got direct crypto investing. Yeah, it's thrilling, but it's also got that wild volatility, the constant risk of an exchange getting hacked, and honestly, the taxes are a nightmare. But then you've got crypto stocks. We're talking about regulated companies, public companies with actual business models that make sense, earning fees, selling hardware. It's a way to get in on the crypto revolution without stepping into the Wild West. So why are we hyper-focused on 2025? It's not just some random date we pulled out of a hat. What we're seeing is this incredible convergence of major events, everything from fundamental changes in Bitcoin's code to the arrival of massive institutional money. It could be a perfect storm for the entire crypto world. And you can see the momentum building right here on this timeline. First up, we've got the Bitcoin halving. This is a pre-programmed event that cuts the reward for mining new Bitcoin in half, and historically, it's been a major catalyst for price. Then you've got the spot ETFs. This is huge. It's basically the on-ramp for giant investors like pension funds and hedge funds to easily buy Bitcoin, with names like BlackRock getting involved. And finally, we're seeing this incredible fusion of blockchain and AI, which is just unlocking a whole new level of possibilities for everything. And it's not just about those three big events. The whole vibe is shifting. Governments are moving from let's ban this to, okay, let's regulate this. That clarity is giving big corporations the green light to invest. At the same time, the technology itself is getting major upgrades, making it faster and cheaper to use. You put it all together and you have a rising tide that could lift all boats, especially the stocks we're about to talk about. So, how do you actually invest in all this? Let's start at the very foundation, the picks and shovels. And in this digital gold rush, there's one name that stands out: NVIDIA. You probably know NVIDIA for their gaming cards, right? Well, those same powerful GPUs are the absolute workhorses of the entire digital world. They're not just for mining Bitcoin anymore. They are essential for AI. They are powering Web3, that next evolution of the internet. So as any of these massive sectors grow, the demand for NVIDIA's hardware just goes through the roof. And just look at the numbers. Over $60 billion in revenue. It's absolutely staggering, driven by their complete dominance in data centers and AI. But, and this is a big but, you have to invest with your eyes open. The stock's valuation is sky high, meaning a lot of good news is already baked into the price. You've got ongoing trade issues with China, and of course, if the crypto market takes a nosedive, demand for their mining hardware could dry up. It's no sure thing, but it is a super powerful way to play the infrastructure side of this whole revolution. Okay, so NVIDIA's providing the hardware, but where do people actually go to buy, sell, and store all these digital assets? That brings us up to the next layer in our ecosystem, the exchange play, and the star of that show is Coinbase. In the US, Coinbase has pretty much become the household name for crypto. They make their money in a few really smart ways. They take a small fee on trades, obviously, but they also have a huge business securely holding crypto for big institutions, which is critical for that institutional money we talked about. And they offer services like staking, which is just a fancy way of saying you can earn interest on your crypto. Make no mistake, Coinbase is right in the thick of it. They're partnering with giants like BlackRock and Fidelity to be the custodian for those new Bitcoin ETFs. I mean, that's the big leagues. But the risks are just as big. Regulation is a huge question mark.
The rules could change overnight. There's a ton of competition, which could push their fees down. And at the end of the day, if people stop trading crypto, their revenue gets hit hard. Their entire fortune is tied to activity on their platform.
All right, our final company is playing a completely different game. They're not just thinking about crypto as an investment you hold. They want to weave it into the fabric of our daily lives. This is the payments play. And the company leading this charge is Block. You might know Block better by its old name, Square. It's run by Jack Dorsey, the co-founder of Twitter, and they are making a massive bet on Bitcoin. Through their Cash App, they've made buying Bitcoin as easy as sending a message. But they're also building the deep underlying tech for a whole new decentralized financial system. For them, Bitcoin isn't just an asset to trade. They believe it's the future of money itself. And if you think this is just some little side project for them, look at this number. Over 40%. More than 40% of Block's total revenue comes from Bitcoin. This is not a hobby. They are all in. So what's the grand vision here? It's to completely erase the line between your traditional bank account and your crypto. They want to build a world where you can just seamlessly move between dollars and Bitcoin all inside one app without even thinking about it. It's a gigantic bet on the mass adoption of crypto for everyday use. All right, so we've looked at the infrastructure with NVIDIA, the exchanges with Coinbase, and the payments with Block. Let's pull it all together now and really lock in on the single most important takeaway from this whole strategy. So here's the bottom line. It's simple, really. These companies win when the whole crypto ecosystem grows. It's about more people using it, more transactions happening, more innovation. That's what drives their profits, not whether Bitcoin went up or down 5% today. It's a way to bet on the long-term trend without getting whiplash from the short-term volatility. And this right here is the key. This is the big mental shift. You stop being a speculator and you start being an investor. You're not just gambling on a digital lottery ticket. You're investing in the profitable companies that are building the entire lottery machine. It's a completely different way to approach this space. And that brings us to our final question, the one for you to think about. Are we looking at the companies that will one day be the new blue chips, the IBMs and Coca-Colas of the digital economy? Or is this just a slightly safer, more regulated way to place a bet on a wild, exciting, and still very volatile new frontier? How we answer that question will probably define the next decade of investing.